Ever since you've come into office, things are really looking up. You know, gas is up, rent is up, food is up, everything.
Most economic analysts believe that it will have a temporary or transitory impact.
The faster than expected increase in some of those prices is actually a good sign.
The overwhelming consensus is going to pop up a little bit and then go back down. No one's talking about this great,
This is something that will settle down.
Transitory.
And the data shows that most of the price increases we've seen were expected and are expected to be temporary. There's nobody suggesting there's unchecked inflation on the way. It's highly unlikely that it's going to be long-term inflation that's going to get out of hand. I don't know anybody who's worried about inflation.
Over the last couple of months, we actually saw it trended downward.
President Biden's chief of staff, Ron Klain, enthusiastically retweeted an economist who had said in part most of the economic problems we're facing, inflation, supply chains, etc., are high-class problems.
And now for something completely different.
What is going on YouTube? It's Brendan from Market Makers. How did you like that montage of the most brilliant, intelligent people in the world back in 2021 talking about how inflation is transitory and nobody expects it to be lasting or to go higher. And this is where we are now, guys. We still have roughly 5% inflation and core inflation, what the Fed tracks. Those numbers are the sticky numbers. And here it is, 2023. I watched an interview with Bostic, Raphael Bostic. He's one of the Fed heads. And they were talking about the disconnect with the market pricing in cuts this year. And Bostic, by the way, who's considered a dove, he said that they're not even looking at cuts into 2024. That's the disconnect. Now, what else could explain that disconnect is there's market participants that understand the Fed is going to break something and they're going to be forced to cut, whether it's because of a stock market crash, some type of economic failure, cascading effect, like more bank failures. So there's that. And then there's just the MPC factor where most people, including professional money managers, just don't follow the news or follow the actual charts and understand what's happening in the broader economy with the headwinds. Guys, I watched economist David Rosenberg. I was going to put a clip, but it'd be easier just to tell you. He was at Merrill when I was at Merrill back in the GFC. Anyway, he was been doing a lot of podcasts lately, and he gave an interesting factoid that I haven't heard anybody else say. He said 100% of the time when the Fed raises rates going into an inverted yield curve, 100% of the time, not 99.9, not 90%, 100% of the time, you get a recession. We talk about recession a lot on this channel. This is not a doom and gloom channel. It is about being predictive of what's coming to the market so you can trade accordingly, because I trade for a living, so I want to make money. We're not talking about investing. We're talking about trading. When do we invest? When do I invest? When the market bottoms. When does the market bottom? You have to have the recession first. As you guys know, the market has never bottomed ahead of a recession in U.S. history, going all the way back to World War II. Okay, so the October bottom is not the bottom. So I'm trading accordingly with upward and downward risk. And then we look at that on the individual trades. All right, so let's jump into this. I can't get over the montage because we have short memories as people. You know, there's always a new cat video coming out that you have to watch, but you have to remember the people that are in power, their predictions, how clueless they are about what's actually happening in the economy, what's actually happening in the marketplace. And here we are, that was 2021. Here we are almost halfway through 2023 with inflation still 2.5 times above the Fed target. Guys, I don't think inflation is going to get down to 2% without a disastrous crash or the economy going into free fall. That's just how it traditionally will work out because of all the stimulus and everything we pumped into the marketplace. But you know what? Let's look at the DXY. I haven't done that in a while. A lot of people, a lot of economists I follow have various opinions. the DXY is going to crater or the DXY is going to come back up. I want to show you what I see on the intermediate term here, okay? So obviously inverse correlation to the markets. If you get a stronger dollar, it puts pressure on cryptos, puts pressure on the marketplace, the S&P, and they can sell off even more, okay? Let's just look and see what I see here. So let's take a trend-based fib, looking on a 3-day chart, double bottom structure here, as you can see. I'm going to take a trend-based fib from that low to that swing high to that low. And I'm really looking at the 1 fib here for a symmetrical move. Take our ABCD tool, go from your A to your B, down to your C. Look at these retracements. So that's a 100% retracement. And then a symmetrical move of a 100% retracement brings the DXY up to 105.85. Now, if you came up to the 1618, the golden ratio phi, then you're looking roughly at a 1618 from your B to D as well. You see that? 1616. So that's my two targets if the DXY does start getting more bullish. Looking for that initial impulse up to 105.851. And then if it continued to be bullish, the 1618 at 108.980. And you could see this relationship if and when the market starts to roll over as well. People go to cash. You're going to see, I mean, we already talked about Warren Buffett last video. He took out 13 billion with AB, sold stocks and went to treasuries. So this is the problem that you have with the debt ceiling debate that's going on right now, because as you guys know, let's just look at the NASDAQ. The NASDAQ hit our upside target here of 13.4, shorted this in the room. Not a lot of movement so far because everything's just kind of hitting or standing still. It's standing still because of the debt ceiling debate. So 2011, we had the debt ceiling debate. 2 days before, I guess, the deadline, they resolved it, but that didn't stop the market, the S&P, from dropping 18%. Why? Well, Warren Buffett is a perfect picture of why. You de-risk. You take money out of the market ahead of time because obviously if the U.S. does default or does run out of money, it can't pay its bills. It affects banking. It will affect the marketplace. It will affect our credit rating, and you will see everything pulled down. So the longer this debate takes, and according to Yellen, who's the Treasury Secretary for those of you living in other countries, but we have until June 1st, and this is May 15th. So I do think if you don't get any type of stronger resolution showing something that there's a plan coming that everybody's starting to agree to, at this week, I think next week you're going to potentially see a lot of selling, getting closer and closer to that deadline. We have gridlock. You have a big spender in the presidency, Joe Biden, the genius Joe Biden. And then you have the Democrats also have the Senate, but you have the Republicans have the House, and they want a balanced budget. They want spending cuts. Joe Biden's budget wants to add $12 trillion more to our $32 trillion in debt over the next decade. That's not my numbers. That's the Congressional Budget Office, okay? The nonpartisan Congressional Budget Office. So that's extremely inflationary. The Republicans know that, and that's where they're butting heads. Republicans want spending cuts, responsible, administration of the budget. Democrats just want to keep spending money. And yes, that's my opinion, but that's my take, and it's my channel. And if you guys don't like that, if you don't like talking about any type of political sphere, what's going on, it affects trading, it affects economics, and that's okay. I totally understand. You can watch other people drawing imaginary lines up in the air to targets that will never be hit. Having fun today, guys. Having fun. Let's look at the NASDAQ. So the NASDAQ, we hit our 13.4 target. Again, took a short position here. We'll see what happens with the NASDAQ. Looking at the money flow, you're yielding back over towards the median line, rolling back over towards the median line. Again, it's just kind of stuck. Looking at our breadth in the market. Let's go ahead and do this. So I put the NASDAQ to see how many of the stocks in the NASDAQ 100 are above the 200-day initially, and it's like 65%. And then I change it to the 50-day. In the 50-day, it's 53%. So another way to think about this, in this big, broad rally, okay, this big, broad rally up to the NASDAQ 100, only half of the companies in the NASDAQ 100, 50 companies are above the 50-day moving average, okay? Again, narrow breadth rallies always fail. Looking at the volume ratio, buying versus selling, there's more selling than buying. You're still below the median line, but price keeps rising. Why? Well, we went over that. It's the mega caps, guys. It's your Microsofts. It's your NVIDIAs, which is not technically a mega cap, but it is the AI boom that everybody everybody's super excited about, and your Apples, your Amazons, Googles. So we'll go over a couple of mega cap stocks today. But what I'm looking at here again on the NASDAQ, guys, upside risk 13,891, roughly in line here with your previous high. Okay, if you see your previous high here, so it's just using the fib. So 13,722 is your previous high back in August. That's the upside risk. If you get some type of impulse, let's just say today or tomorrow they announced the budget. The budget, they came to an agreement on the budget, and it's going to get passed. And Biden's excited; he wants to sign it. You may get some type of rally up. But again, to me, I view everything as risk, guys. Everything is risk. I don't worry about whether or not it's bullish or bearish. My opinion on the markets, when I'm looking at individual trade setups, it's all about risk. Knowing the headwinds the market has, looking at the risk. So what's my max upside gain? If I said, you know what, should I be longing here? Well, my max upside gain here is about 3%, 3.35%. That's if we could defeat the high from August. Okay, that's my max upside gain. If I'm looking at shorting, and I understand a recession is coming, I understand the indicators that have been 100% correct going back to World War II saying there's a recession coming, then I know the risk is more to the downside because I know the market doesn't bottom before a recession ever in history. So if we scroll down here, just to go revisit our lows is a 20% risk to the downside. So again, this is a 7x almost on the downside gains you can make in profit. That's just revisiting. That's my thesis is we're sweeping these going to a new low. So a 7x gain to the downside and a 3%, 3.5% max gain to the upside. Why won't this be a bull market in my opinion, guys? Because you're not going to have a bull market when earnings keep coming down. You're in an earnings recession. So when you turn on the news and they say 80% of the companies beat, so this is actually way better than feared. They don't tell you the second part of that sentence, which is it's on revised down earnings, which they also did last quarter. You're in an earnings recession. Companies are making less money. So the economy is deteriorating. You see it in all the indicators in the marketplace, except for the lagging ones like unemployment. And when that happens, guys, the market will already be selling off because we've been over the chart many times. When does unemployment really spike up? After the recession hits. Okay. By the way, guys, the average recession timing for when it actually would start from the rate hikes is about 15 months. And if you go back to March of 2022, basically lands you at this summer, which is when I was expecting the recession to start. Many of you already believe the recession's we're in it right now, and that could very well be. The government won't tell us for about another 9 months. They'll say, oh, actually, the recession started in Q1 or Q2 of 2023. So we have to wait and see about that. But that's where we're at in the NASDAQ, guys. I don't expect a lot of movement here, unless we start seeing more time degradation, unless you have other catalysts in the marketplace, the conflict escalates, other bank failures. There's other things that can kick in. But the big one right now, the gorilla in the room is the debt ceiling debate. Something interesting here on the S&P, guys. How flat is this market right now? It's extremely flat. But if you would have bought this market September 13th on a Thursday, not a Friday, of course, you don't want to do anything on Friday 13th, but September 13th, 2022, you were at the exact same price as you are now, right? You hit 41.43 this morning on the daily candle. So September 13th, 2022. So you've just been going. This is why this trading range has been so awesome to find these trades. Your 9% move that I shared here, been trading these 100 handle drops here on the S&P, but we're just right back up to the same target. So something's got to give, and it will be soon. The debt ceiling's going to be a big catalyst. As time goes by, guys, in the bigger macro picture, the bears are going to get the upper hand as time goes by, because when you have price, if price did want to make it surge up, and again, what's my upside risk here? 42.89. We have it on the other chart. 42.89 is a 1618 on the S&P, which gets you back to that August high, just slightly below it, right? So if I was looking at this, we'll take today's daily candle from 41.43. Again, same type of move, 3.5% move to the upside. Okay, that would be the profit. If I'm like, you know what, we could surge. Maybe I'm really optimistic, and AOC and Jim Jordan are going to hold hands. These are two politicians that have polar opposite views in our country, but they're going to hold hands and they're going to get this budget done, right? They're going to get this budget deal done. Everybody's going to be excited. 3.5% move to the upside is my max upside risk. 42.89. You'll hear on TV they'll probably say 4,300. But again, the downside. What's my downside? Well, knowing that the market never bottoms ahead of a recession, just to come back to this level, which is not even the bottom. Let's go down to here. To come down to the bottom is a 16%. So again, guys, you're still looking at like a 5x advantage to the downside. That's if you don't sweep the lows. Now, you can also argue you're not going to come down to your lows. I get all that, guys. That's just personal opinion. Everybody can have their own opinion when they trade things as you see fit. But this is a range we've been shorting. We shorted it up here at 41.73, caught a nice 100+ handle drop, and now you're back up here, and we're just trading in and out of the markets until we start to get clear degradation and decay in the marketplace. And there'll be a catalyst. Here's our 45 angle, again, holding beautifully for support and beautifully for resistance right now. And price is 41.28. Guys, I think the last time I made a video, price was like 41.40. I mean, nothing's moving right now, so I totally understand the frustration and boredom in the market. So I do appreciate you guys watching, so definitely like and subscribe to the channel. Guys, if you want to trade these markets, good time for my break here. If you want to trade these markets, check out SimpleFX. They help support this channel. They help support this program that I give to you for free. And if you want to trade them, check out SimpleFX. You do get up to $5,000 instantly in your margin to trade with. It's a fantastic decentralized exchange. You can trade all of the commodities, all the equities, and of course the cryptos there as well. Instructions in the video description as well as pinned in the comments. And BingX, if you don't want to use a VPN, you can check out BingX, traditional crypto exchange. And with our link, you get our bonuses and no VPN is needed. So hope you guys check out one of those two great sponsors to the show. Let's look at the money flow. You're at the median line in the bearish territory. Look at your selling here, the volume ratios. This is the total aggregate volume. Is it more buying or more selling? You can see it's clearly more selling, even though you are going sideways, okay? And if we look at the breadth in the marketplace, the breadth above the 200, you are looking at less than half the companies. 46% of the companies in the S&P 500 are above the 200. So if you want to be more long-term bullish, what do you need? Participation, a widening of the breadth. You would want to see this go from 46% to 56% to 76%. That's a bull run, ladies and gentlemen. When you start getting up into the larger numbers, the breadth keeps expanding, meaning all the companies are participating. That's not what you have. You have the opposite. You're losing companies above the 200, even though market prices are hanging in at the higher band of the range level. So don't rule out a surge up to 42.89 because, again, the market wants to be bullish. But if it doesn't happen, guys, greater risk to the downside, in my opinion. Looking at Bitcoin. So the last trade we did in Bitcoin that we shared in the room gave us a nice 13.6%, basically 13.5% to the downside here. We had another trader shorted up here. So we've been doing a lot of active trading on these Bitcoin movements. Just pulling a simple fib retracement here, guys. You got this nice little rebound up. This could stop at 27,766. I like the 618 at 28,302 if it does get a little bit more bullish and come back up there. But look at your trend, guys. This is a daily chart. There's your high, your lower high. There's your bearish structure, your double top, which broke, came down, and what we talked about last video. I like that range down here of 25K. You got to 25.8 to come back down to this Wyckoff ceiling. You have support structure here. And, this may be drifting down this way as it chops along and you come down to this area. So you just have a series of higher lows as of right now, okay? Lower lows and lower highs and lower lows in this trend. You're getting a little bit of a rebound, and with rebounds, you just want to watch your retracements to see where it gets to if you plan on actively trading this in a smaller time frame. But 618 is a good area, 28,302. If it got super bullish for some reason, I always look at 786 on retracements, which is 28,984. But this to me looks like it's going to peter out somewhere around here, 27,766, and maybe just start coming back down to the base because everything's just kind of chopping around. Oh, we've got to do the indicators. Let's do the indicators. MFI. MFI is in bearish territory below the median line. Looking at silver, guys, silver, it fell right to the trend line. I was talking to Synchro in the room back when it was up here, and I said, I think it's going to fall right back to the trend line. You know why? This is our 2-year long descending highs here, trend line, and that's exactly where silver fell to. So we shorted silver up here in the room, got a great decline in silver, a $2 plus decline in silver here. So it's a great trade. It made that double top structure. Now, this is what we talked about many times on the channel, right, guys? We talked about this. If silver is going to be bullish from a trading perspective, I own physical silver, physical gold, but from a trading perspective, when and if, I think it's a win, when the markets do turn down, silver needs to hold this trend line, okay? It needs to hold a trend line and build a base and then come back up, right? Because when the markets turn down, silver and gold have been moving with the markets. I mean, you can see it in their bottom. The silver here bottomed in late September, the markets in October, and then they both went up, okay? So if the markets roll, which again is my core thesis, made that video a few months ago, going to repeat the GFC cycle. I expect silver to fall through here. Could come back up for a larger double top structure, right? So you have to watch that. But I think you're going to fall through here, and you want to watch 20 spot 73, retesting your base over here at 17 spot 42. And if it got super bearish because the markets start really falling apart, I'm looking at $12 to $14 silver, okay? And then I expect silver to go on a run as the stocks still haven't bottomed yet at that point, okay? So you'll see a nice rebound in silver and gold. It's been my thesis for months and months ever since we started talking about it on this channel. But my thesis can be proved wrong. If silver holds this trend line, just does some type of basing structure, your Wyckoff, and at some point wants to pivot out to the upside, okay? That's what you're looking at with silver. Upside key target from here, if it did get more bullish, would be 26 spot 98, basically $27 at the 1 fib. Looking at gold, gold gave us our soul candle above 1618 at 20, above 2055, went to whatever, went to 2067. Again, each time it's done this, every candle after that was subsequent decline. If gold is going to stay bullish when the markets roll, then it needs to hold its core structure up here. To me, it really needs to stay above 1900 at the 618, okay? So you can get some retracement, some falling down, some up and down action. But if gold can hold 1909, it could have more of a bias to retest and go back up to the upside. But again, if silver falls, gold's falling. Actually, vice versa, gold being the larger market. But if gold does start falling, watch 1909. You lose that. It's a key fib here at the 618. You lose that, you have the 1 fib at 1811 to retest your base. And then you have 1742. But the key one to watch, and this is the higher up structure here, the 1618 at 1654, which is where if you break below this, that's when you start getting into our gold targets that we had lower down, the 1521, the 1389. But again, this is a ways away. You could be chopping around in here until you really see some movements in the markets, okay? Let's look at some individual stocks. NVIDIA, we've been trading in and out of NVIDIA. Again, from a just simply Wyckoff TA perspective, this is a bullish structure. You broke out above your Wyckoff. Okay, you see this? This is your Livermore pivot you're trying to establish. The problem, of course, that you have is you got a lot of volatility here. Fell back into support, came back up. And, you could be easily just printing a double top structure. Being on top of Wyckoff does not necessarily mean you're going to pivot to the upside. It does if the market conditions are conducive for it, meaning, more upward trajectories expected in the market. So you could get some more to the upside. Just looking at this on this simple fib projection out here, you're looking at 296 on the upside. You're at 285. I think originally on my original fib layout, we had 301 as upside risk. But what it's doing now is holding this range. And more than likely, if the debt ceiling debate drags on, you're going to see it do something like this. And then you're printing a double top. And then you're coming back into this trading range. And then if things really start deteriorating, you're exiting the trading range. Okay. So looking at that on the video, what I see here, 618 is decent resistance at 287, 291. If people are asking me where would I want to re-enter this, if you come back up to the higher end of that range, which is really that 287 to 291 range, you can see up here, you got a nice candle up here. This could be an interesting area depending what NVIDIA does, but if it just rolls to a lower high, you can need to watch that 287 area, okay? It's at 286 right now at time of this recording, but I expect some volatility here, guys. Expect volatility because of what's going on with the debt ceiling. Let's look at Microsoft. Microsoft sandwiched beautifully between our original idea here at 301. And I did the fib projection showing you could get to 312. And where did it get to? 312 is holding as resistance. Got a gap here. Microsoft, looking at the MFI, guys, on the daily, okay? You have bearish divergence here. You see this? So you have money flow. This is volume. This is money flow into the market. And this is the same as the RSI because it's volume weighted RSI, okay? You have price going up, you have money flow going down, and you have price hitting a ceiling at 312 right now. Again, I like to short much more volatile assets. This isn't a high beta stock, Microsoft, but if this is something you're looking at trading at 312 for right now, seems to be holding up. The upside risk would be 323. And again, I expect this to come back down. This is that big impulse up with the chat GPT, the AI tech craze. So I do think this is going to come back down. And if you start looking at your lows where you were 214, I mean, this actually has a nice, decent sized drop that this thing's going to do when the market finally starts to roll over. First Solar. So we traded, this thing pumped mega on Friday. Look at that gap. Look at that, Matt, 26% move, $45 or $47. Pump mega. We talked about needing this resistance at the 618 at 181 to hold. Clearly did not hold. Massive pump. First Solar, apparently I was trying to find out why it was pumping. Some nothing article about there's some tax benefits that are going to get passed or whatever for solar companies. But this is a meme stock, guys. We've been over the numbers last video. This is a meme stock. This has this PE on this stock. I think it's up 257% since June or July of last year. And the PE on it is north of 400 on a trailing 12 months PE. Okay, so again, could it have more upside? Yeah, our upside risk is 244. We initiated shorts, many of us, including myself, up here at that 230, 232 range, wherever they got up to. And you know what? I want to hold on to this a little bit. Could it get up to the upside here at 1618? Sure, it could. I think you're going to see some retrace. If nothing else, I expect this to come down and retest the Wyckoff ceiling for support, which is 217. It's at 225. Already this morning, it got down as low as into the 222s. Highly, highly volatile stock. If I was going to add to this position, I would want to see this cross north of 230 again. And then you need to really make sure that it's staying in that range, not impulsing up to that next level. Big moves in this stock. This is the largest move in First Solar since 2013 when it moved 46%. Okay. So big moves are capable in this stock. But again, overall market theory, if this was just Wyckoff and you didn't know if the market was bullish, you didn't know the market was bearish, you didn't know about the economic headwinds, you're on top of your Wyckoff base. So what you'd want to see is this pullback. This could be your pullback for your pivot out to the upside. This could easily end up just doing what NVIDIA is doing, start pulling down, pulling up, pulling down, and then you're making some type of bearish structure, potentially like a double top that could break to the downside, okay? A lot's going to depend on what catalyst enters the market next. So that's what I'm thinking on for solar. MSTR has just provided great trades. This is Michael Saylor's Bitcoin company, but they own the most Bitcoin of anybody. So looking at this, and from a company perspective, looking at this again, we've just talked about how many times, guys. 333 to 360s, excellent entries here. You got all the way down to 267 from the entry up here at 346, and you're at your neckline. You're at your neckline because you have this massive double top structure. Okay, so you're just bouncing off the neckline here. This could clearly just roll up. But, again, it follows Bitcoin, and then you're just making that same series of lower highs here if this just rolls up. So if you're not in this trade already, I wouldn't be adding here. This is just my opinion, just my thoughts, guys. But I would just look at it more like, where could this retrace to? to me, this trade I don't like in between trades like this. What do I mean by that? You're not at your optimal entry point, which is up here above 333, and you haven't broke your key support area of 273 on the fib. So you're just down in this quadrant. So I don't see really a point in, say, taking a trade here at 300 and then it rolls up to, 310, 315 and then rolls over. I would rather see it break the critical support level, retest it, in Wyckoff theory here, retest it, fail, then come back down, right? Then trade that breakout to the downside or come back up, back into our optimal entry range. I don't like to trade inside in between. I always want to trade at extremes. That's how I want to trade. So let's look at Google. Google laid out that fib projection for you guys. Look how beautiful that thing hit, 118. So we hit 118. That's where Google's at now. Again, people are all excited about it, but it's because Google did a presentation about AI. AI pumps your stock. Everything's stopped moving. Everything's paused. Google upside risk 126. Again, not a high beta stock per se, but as you can see, there's clearly downside here at 83. So that's roughly a 33% drop. If this thing does want to roll down, the NASDAQ traditionally does fall more than the S&P when you do have major market crashes because tech operates at such high PE levels, okay? A lot of tech companies don't make any money. Google and Amazon and Apple make plenty of money. But just keep this in mind, 118 here, you're just stacking candles, 3-day chart. You can see if this holds if you're interested in trading this. I'm waiting to see what happens with some of these more volatile stocks. But 118 is a good level here on Google. And where could it come back down to? At a very minimum, I think you're revisiting your lows down at 83.57. Let's look at the DAX because it's doing nothing, stacking sideways. 15,916 is the current price. Thoughts have not changed on this. DAX tradable range, 15,974, 16.2. Okay, that same range is held true, especially in these movements. You can scalp, you can do all different types of things here on the DAX. DAX is waiting, just like everything else is waiting. American markets are going to drive the European markets, and the CAC, after that initial nice 4% decline, rebound decline, trying to come back up again, getting resistance at 74.52, getting a lot of supply dumped on you. So 74.52, 74.88 are good, strong resistance levels. CAC is just plodding along, guys. Everything's flat. I mean, the CAC is minus 1.8 points right now, 0.02%. So nothing is moving. But I hope you guys enjoyed this video. Definitely consider checking out our Discord. Those two exchanges will pay for your first month for free. So check out our Discord, guys, and come hang out with us. Come take some trades. Come join the community of 13,000 people. The link to that is in the video description. Message Lee in the Telegram, and he will help get you set up. All right, everybody, take care. Next video is coming Thursday.